Hello and welcome, everyone. It's great to have you back to Catholic Money Mastermind. I'm your host, Ben Martinek, with the Catholic Financial Planners Network, and we've got a really interesting conversation today. And it's one, to be honest, I think our co-host, our guest, is going to be teaching me quite a bit about, because it's one thing I must say I feel like I've spent a number of years learning things and am decently well studied, but I must say I don't know much about this subject matter. So I'm looking forward to the deeper conversation we have on it. So without further ado, Jerod Frank with Wealth Coordination Partners out of the Dallas-Fort Worth area. Jerod, welcome to the show. Great to have you. Why don't you say hi to everyone?
Hey, Ben. Thanks for having me on. Hey, everybody. Like I said, my name's Jerod Frank, based in the Dallas-Fort Worth area. Married, got a couple kids, been in the financial planning business for 8 years now, and Catholic for the last 4 of them. So very happy to be on here and happy to be a part of the Catholic Financial Planners Network.
Yeah, Jerod, we love having you part of the network. You've been around here for, I think you were kind of kicking the tires, or at least, visiting the network for a few years, and been here more recently, joined up. So we're super excited to have you be one of our many advisors now on the network. But what's fascinating, Jerod, is, you're part of your background, in addition to being a financial advisor, is, that you recently came into the church and are a convert. And we don't need to spend, too much time on that, but I am just a little curious, what kind of prompted the conversion? What did you previously practice, perhaps, and what moved you to Catholicism?
Yeah, sure. Thanks for asking. So how I would describe it in short is that I grew up Baptist, Southern Baptist, wonderful family. I got 5 brothers, just a great upbringing, just love Christ, love God. And when I was, this would have been about 5 years ago, my brother-in-law, so my wife's brother, converted while in grad school at Baylor. I'm also a Baylor grad as well. So he was a few years older. We went and visited him and his wife. He just pushed me on a few things that I was not comfortable answering him on. And he's an attorney, so he does not mind poking and prodding. And I have 5 brothers, so I don't mind arguing. So my wife and I came back home and decided, hey, we owe it to them to know what they believe. And then the other thought in the back of my mind is, and also to prove them wrong. And so we just dove in together and kind of just came to the same conclusion that they were actually right about a lot of things. So the short version that really drew me in was the Eucharist. That was kind of the first domino that fell. And then kind of the assumed unity in the church, kind of just throughout Scripture. Just this, it was clear that there was intended to be one church, and it seemed really difficult, if not impossible, to know the truth without some sort of body that kind of contains truth within it. So that would be the very short version. So I had the blessing of my wife and I coming in together at the same time, which I can't even tell you how grateful I am that we were on the same boat for that. So that was a wonderful experience that I'm sure I have enough friends that have dealt with it in different ways, where one's leaving or one's coming in and the other isn't. So I was incredibly blessed in that sense to have a wife who was on the same page as me for that. So that's my story in short.
Well, that's just fantastic, Jerod. I really am delighted to know more about that, and just want to say welcome home, on behalf of everyone here. It's great to have you as part of the church, and you're such a strong advocate. I think, folks, you're going to carry this away from this conversation today. We're going to get into a bit of a technical matter, and Jerod is going to really strut his stuff for us in terms of what he knows, but really speaks to his passion and his commitment. And we will have hopefully some tie-ins, especially on this notion of moral investing, with if that's a priority in your situation, which I think it probably should be, at least for most committed Christians and Catholics. Jerod's going to be a great resource for you if you're looking for a financial advisor to help guide you through questions of moral investing. So, the matter, or the question at hand, is this notion of usury, which, goes back really, it's maybe received its prominence in medieval ages, but, is ultimately a biblical notion and a concept, and comes from Judaism. And I would say, the Old Testament, the ultimately with the Ten Commandments and Moses, to the Pentateuch within the Bible. And it's this issue of generating or earning interest on the loan that's lent to another, and whether or not that's an acceptable practice, and whether or not, the issue of earning interest on somebody else ultimately is a means of demeaning them or undervaluing them or ignoring their dignity and losing sight of them being found in the image and likeness of God. And so, but, we have in our society today, common practices of the use of money lending. And one of our common investment tools, especially in the form of bonds, is, to get interest, maybe on CDs as well, or just savings accounts. And so there's a bit of a question of like, is all interest bearing, immoral? Is only some? In what circumstances is it? What's this notion of usury, and when and should we be concerned about it as mindful investors in the environment, the atmosphere in which we're practicing in? So Jerod, I'd like to kick it off to you and give you a chance to share and explain a little bit on your definition of usury. Maybe we can just start with that. How do you define and understand and think of usury?
Yeah, so this is, and I'll be really brief on this, is the background of why this was an area that I really dove deeply into, which is that I was approached by a Catholic that I really respect, and he kind of just bombarded me a little bit with why any interest at all whatsoever is usury. And essentially, and this is right after I came into the church, and I was half convinced that I needed to quit my job and do something else. And so really I was a little bit panicked. I didn't know, can I keep doing this? I'm obviously, helping clients earn interest in other ways. And so that really is what made me dive deeply into this. Like, I just wanted to know, like, is what I'm doing wrong? It doesn't feel wrong, but I don't know. I've been wrong on plenty of things before. So I dove deeply into it. And there's a lot of camps within Catholicism. I would say on one side, you hear a lot of people say, and if you ask 100 Catholics, you're probably going to hear 100 different answers, which is that you hear a lot. The most common one I hear is that it's high interest. Another one that you hear, I would say more on the traditional side, Catholics who are really, really deeply trying to follow, to the letter of the law as far as church teaching goes, is that any interest at all is usury. So I'd say those are, the most two common camps that I hear, toward at some point, lending at interest, payday loans, credit cards is usury, and on the other side, it's any interest whatsoever. And when you look at what the church teaches in encyclicals, so a big one that's really important is Vix Pervenit, and forgive my Latin if I'm not pronouncing that correctly. But also it's addressed in a couple other places. Thomas Aquinas talks about it quite a bit, and there's also a couple other encyclicals and statements from the magisterium on it. So how I would describe it is interest on a mutuum loan. So as we discussed earlier, a mutuum loan is kind of a Roman Latin term. It's a civil term. It's a type of loan. And that is, think of it, the example Aquinas uses is giving a loan for buying wine. You give somebody a loan to buy wine and they consume it. So he considers usury to be a loan where you're selling two things. You're selling the wine as well as the use of the wine. So you're selling something that doesn't exist is the phrase that he uses. But really what that boils down to is the personal guarantee. So that is, if the loan requires somebody to pay back the amount lent plus interest, that is a usurious loan. That's the definition that the church uses. So in instance, the other side to it would be a societas loan. So that is one that is a non-recourse loan that's backed by, say, collateral.
Well, what I'm kind of curious to know, because again, I'm not well read into this, although I mean, I've certainly read some Aquinas, and he's not an unfamiliar authority in my mind, is what is the issue? Because the natural, at least the modern justification for why, if we had a transaction, financial transaction, and you wanted to buy some wine from me, I'm a wine dealer, but you don't have the full amount to pay for it. we could set up a deal where you make payments over time, as we commonly will see today, and eventually you'll pay me in full. And since I'm not receiving full payment today, maybe it's payment over the course of 6 months, 9 months, a year, whatever it is, it's an issue of a delay in the receipt of that money. I'm going to charge a little more, just anticipating, the increase of the value of money, or that I could have been doing something else with that money. So we can proceed with this transaction. We can call it a deal. I'll give you the wine and you can start making your payments. I'll just charge you a little more for that delay. And like that issue of like a delay in getting charged a little more for working out that financial transaction, I got to be honest, I kind of struggle to be like, well, why would that be problematic? I mean, I can see it being problematic if it's a high rate. And I can definitely see it being problematic if it's exploitative or manipulative, or if it's like perpetually putting someone in a position where they'll never get ahead. Like I'm fundamentally taking advantage of them. But I don't know, let's just say the rate's reasonable, not like 15 or 20% like you might see on credit cards. Maybe it's a 7% rate. Would you still see that sort of transaction as the use of usury? And if so, what's problematic in that?
Yeah. So I would say the short version is yes, it would be usury. And the reason for it is the means of recovery. The language that I use is the reason alone is usurious is that it can be essentially never ending. So there's no way out of it if you get into troubled straits and can't pay it back. So in that instance, for example, you give somebody the wine, they say they're going to pay you over the course of a year. And if you charge interest, and let's say they just, they lose their job. If you have a loan where you can keep racking up interest forever until they pay it back, then I would say that's a usurious loan. So in that same instance, you could lend them the money and say, hey, you have 6 months to pay me the amount, the sales price. You could expect that money back for the rest of their lives. Pay it back as you can. And then the other side to the one where you could charge interest would be, that's where the collateral comes in. There's some sort of fixed collateral to where if somebody defaults, you collect the collateral and then it's done. It's a means of escape. It's like a jubilee. It's a resetting. Nobody can be indebted forever. That would be the main kind of concept. That's really the difference is, can it end? And I would say a good loan has a means for ending and not putting someone in perpetual debt forever.
Sure. So, I mean, let's say someone is, not managing their money particularly well, and they have this perpetual tendency to keep buying more than what they can afford. They're living above their means. And then they're putting themselves in this cycle of being on credit cards and having a perpetual credit card balance. And what initially was purchased for, I don't know, let's say $5,000 or X amount just continues to grow and become a larger and larger burden. And, as a credit card company, if I'm in that situation, this is great business for me because I've got this person, I've really got them on the hook, they're just going to continue to pay me. And what was $5,000 and what was needed to be paid is turned into $10,000 because of delayed payments or whatever it is. And this person really is, become enslaved, to me. So I can see in all that we're like, okay, yeah, this is bad, especially if it's fostering this notion of spending more than what you can, and I can see where it's crossing the line where as a business owner, it's like, look, you don't have the money to buy wine from me. Like if you can't pay for me at all at once, why don't you just come back to me when you can and we'll be good. This potential lending arrangement, the question that really is present in my mind is like, are we fostering more economic activity or encouraging people to stretch themselves further than what they should be, thinking they can accomplish something through financing, through credit cards, than what they could accomplish if we were like in a cash only arrangement. So like as a matter of, character and virtue, I can get really behind that and say, yeah, we probably are pushing people's finances more and are hopeful, especially in the more egregious situations of credit card companies, are hopeful that people come into financial issues or are going to mismanage their money because that's where they make, their big dollars, those late payment fees and penalties. and the interest, and then the interest, generating interest on itself. So I can see that being problematic. I suppose what I have still is a little troubling for me. Maybe you can help clarify for me, Jerod, because we have this distinction of a loan that's collateralized. So potentially we can just sell. It hasn't been used up. I mean, that's the difference between the wine and the home. I mean, the home is still there, after years of use. You can still at least sell something back. If I take the wine and within 2 months I've drank whatever I bought from you, but I still have this outstanding obligation, like there's nothing else to give back to you other than, what I still owe you. But that aside, like my natural thought is like, well, as a business owner, I'm taking a risk to lend you this money. You're not going to pay it back in full. Like if I always just keep this at a break even or at cost only, no interest, then there's really no incentive for sure for me to do any of the lending. Maybe that's the whole point. Like it's just bad lending to begin with. But like, shouldn't I get rewarded for the risk? Like that's what my mind is naturally thinking. Like, why wouldn't I get rewarded for the risk? Is it just that we think it's a risk that shouldn't, like the underlying activity is vicious, and that's why we shouldn't be undertaking this?
Yeah, it's the what's built in at the end of it. It's not the interest rate. So let's say if they had a separate asset, they had a car sitting on their lot, and they said, hey, hey, I'll purchase this wine, and I'll pay you back 5% interest, and if I default, you get the car, and then it goes away. That would be fine. Under my understanding, that would be fine. There's a way out. I would say there's no gun as the last resort, which would be you're on the hook forever. I would say that's the thing at the end of the day, where if it goes south, there's this usurious essentially option to where they could just be indebted forever. So I'd say if you take that gun away at the end of it, then it's fine. You can charge interest. But it's something that can be done to a person. And so the interest rate, whether it's small or large, is somewhat arbitrary, because that's so different based on what time we're living in and the economics of the time. So, what's high interest now is low interest in a different time period. So, that can be very relative. So it's hard to make, I would say that's not an objective measure of, this is right or wrong. When the church teaches, any interest on a usurious as like a category type of loan is wrong. That would be my take.
Sure. Now, well, some of my thought, Jerod, is like, well, part of the concern here, again, I think the thing that I'm in full agreement on, I think, look, the church is right, is like, look, are we, our actions, especially as participants in society and as business owners more so, and as financial advisors directing our clients, especially as investors hoping to make money on our money, like we want to be facilitating and promoting the common good. And we can't be thinking about what's just good for ourselves. We have to also be thinking about, is this practice, especially if written large, would this be good for society? And so there's fundamental concepts here of supporting and getting behind human dignity, and making sure that we don't turn each other into a means to an end. There's different ethical principles and the reasons for that, but let's just broadly speaking, like that's what we need to be thinking about. Ultimately, society only functions to the extent that trust and care is present, and if in our individual actions we start to destroy both this notion of trust and genuine care for our fellow man, then society will cease to cooperate, because that's kind of a bedrock needed glue for us to engage in business. So any business activity that starts to degrade trust, this notion of either trust or care, it certainly needs to be examined and questioned, and maybe outright disallowed. And so, if we're putting people in a point where we're manipulating and we're taking advantage of them, or we know that human nature being what it is, that they'll probably eventually get behind on their payments, or we'll give them more money than what they can afford to spend, and now they're indefinitely indebted. Like, yes, no question, I find that problematic. But then my mind, just being in finance also goes, well, like, is this permanent? I mean, you could just declare bankruptcy and there's effectively a restart or reset. And now you got bankruptcy on your record, and the odds of you getting another credit card and restarting this is going to be pretty difficult given the fact that, you have that black eye. Like, is that not a sufficient solution to allowing the practice that that's the fail-safe is bankruptcy? I mean, what are your thoughts on that?
Yeah, so I would say the short version is like, yes, that's a safeguard. Like that's like it's a protection against usury. It doesn't solve or doesn't make usury not usury, but it ends it without the lender's consent, would be how I would describe it. So it's like it does certainly solve it. It's a way to end it, but I don't think it would change what it is. And most people try their hardest not to. They'll keep their student loans on the books for 30, 40 years and constantly carry credit cards. So nobody wants to go down it, but it certainly is a way. It's a safeguard that's kind of put in place to protect people from usury.
Yeah, I mean, I think within that context, it's like, well, then, I mean, maybe as far as the contract is concerned, potentially this is endless, right? I mean, even if whatever you initially bought on your credit cards is long come and gone, and let's just say become useless, either because you used it all up or it's just depreciated in value, but they're worthless materials and you'll only get a fraction of your money back, and so you still owe all this money, plus maybe more. But there's a question of, people will be like, the system is rigged, and I don't know. I don't want to get vulgar here, but we can, put it up to the man or whatever. I don't owe this. I don't have to pay this back. It's not really mine. Someone else conned me in on this. And so there's a question of responsibility and justice and what's the right way to handle it. I don't want to go down too far that road, but I hear people, who don't have issues, repaying their student loans or even issues repaying their credit card debt because they feel like they're a victim, in their circumstances and that someone took advantage of them, which maybe to some degree it is. I mean, I think the bigger question, the concern in my mind here, usury aside, is like, what kind of society are we in which a consistent concern we have as we collaborate with others is, what's your angle? What kind of game are you playing with me? And are you hoping to hoodwink me and take advantage of me in some way? Like, ideally, we would hope that, especially within a Christian society, as we're collaborating and working together, that like that's not an overarching concern or worry. Like, I suppose in a perfect world, there wouldn't be this need even for bankruptcy. But I don't know. My mind at least says, look, I mean, yeah, it's credit card lending great. For the most part, it's not. I don't really encourage my clients to participate in it. But if we have the fail-safe of bankruptcy, it would be hard for me to find the whole arrangement morally problematic, because that in itself does nix this being a perpetual loan. I can see it if it's a perpetual loan. Yeah, that is problematic. But if we can nix that, it's hard for me to say that's not a great solution. But my opinion aside, I mean, what have you read in church teaching or doctrine, or what's your take on that? It sounds to me like you don't think bankruptcy is sufficient as a fail-safe, or that it's still protecting a vicious act, almost like maybe like a form of prostitution, they call it an innocent crime, but it's still safeguarding something that, look, fundamentally, even if that's safeguarded, like, should we as a society be having this, right?
Yeah. So this is probably not the best analogy, because this is our first time asking that question. So this is probably not a perfect analogy. But it would be like a little bit like, let's say, instead of usury, we have the crime being murder, and bankruptcy is, the police or the justice system. It's like a way of prosecuting it or making the consequences, not as bad, or maybe preventing some of it. I don't think it changes the definition of what is.
Sure.
And so, but let's say, for example, you take most of the people who are, I would say, victims of usury, never declare bankruptcy.
Sure.
Most of them just carry the debt for 30, 40 years for something that was already consumed. And so I would say they were victims of it for a long time and never declared bankruptcy. So I don't think it changes the nature of what makes it wrong. Because something to just clarify and to switch a little bit, like why all interest is not usury, would be you can only commit usury against a person. You can't commit usury against a business unless there's that personal guarantee option against the owner, unless there's recourse against the owner. So just thinking back to scripture, the parable of the 10 talents. Not only is interest earned, but it is expected. It was, it's considered, responsible. So obviously, earning interest is a little bit separate. There are ways, validated in scripture where you can earn interest licitly. So it's like I said, it's the gun to the head option at the end, which is there's no walk away. There's no walk away from this. And like you said, that's part of the contract. The defenses of it, the bankruptcy, I would say is separate. It's like a mitigating factor, not a full solution.
Got it. Well, let's talk about it. I mean, I think we're starting to go this way. Let's continue on with it. Like, so what are some of the practical implications of this as an investor? Especially, let's say we have some clients, or maybe they've reached out to an advisor with the Catholic Financial Planners Network, which, by the way, folks, if you haven't, be sure to take a look at the Catholic Financial Planners Network and the advisors listed there. Love for you guys to connect with our advisors. These concerns that we're raising today are, part and parcel of part of the advisor, the caliber that the advisor that you're getting, among other things. So again, be sure to check out Catholic Financial Planners Network when you can. And that's CatholicFinancialPlanners.com. So this aside, I mean, a lot of the work we do is investing, and it's not the full scope of it, but a good part of what we do for our clients is investing. And so this is a question of what kind of investments would be clear and without any concern of being morally problematic, and maybe when should we be aware? I mean, some things that stand out in my mind so far is like, look, hey, I mean, if you're invested in a credit card company, who's really their whole their whole business practice is usury. I think pretty much exclusively one might conclude from this. Like, is it okay for you to be moral to be invested in that company, right? If all their profit is coming from this arrangement, but so there's that question. But we have other issues of various types of interest that are generated between savings accounts versus bonds. Which most of them are institutionally or government based, but one lending arrangement that I think has kind of died down in some of its popularity, but there's other variations of this. Would be something like Lending Club, where it's a peer-to-peer lending, as they call it, where if you need some money, I'll give it to you, and then you can pay it back to me in interest. Like, is that an acceptable investment? Perhaps I'll kick it over to you, Jerod. I mean, based on everything you've shared so far, I mean, it seems like you got to keep Lending Club or variations of that type, out of your portfolio. What are your thoughts?
It's been a few years since I've looked at Lending Club. I believe so. If it's what I remember, where you could take them, they're signing a personal guarantee on it. I believe, yes, that would be something to stay away from. So to kind of speak to the other side of, is all interest bad? Like I would say the things that I think are clearly, licit and allowable would be, interest on a bank account. I think it's clearly licit, allowable. There's no recourse to anybody. If, you're at risk of the bank going under and you don't have recourse to any of the bank CEOs, employees, like it's protected. That bankruptcy protection is up front in the kind of corporate structure. Nobody's personally guaranteeing it. If they're out, you're out of money. Up to the FDIC limit, or anything over it. So I think clearly that's licit. There's no usury going on there. Corporate bonds are licit. They're allowable. Again, just emphasizing usury is committed against people, not corporations. So this is the weird one, I would say. There's no interest rate. If you charged 30% to a company, with no recourse, that would be, I would say that's where you could get into the idea of, so I think something could be abusive without being usury. So
Sure.
like, I think if I tricked some company into taking a loan from me at 30% interest, but if they figured it out basically and just stopped paying and there was no recourse to them, I think technically it probably wouldn't be usury. I could still say it could probably still be sinful and abusive. Like, it sounds like there's probably trickery done if I convince them to sign up for that. But I wouldn't call it usury. So yeah, usury is done against people. So corporate bonds are fine. I think it's where you get into the private credit lending towards people where there is that recourse option, rather than having kind of the corporate veil or collateral protection that kind of gives the out option. That's a clean breakaway, a jubilee.
Sure. Well, at the end of the day, corporations are still comprised of people, but perhaps there's just a suggestion of that the caliber of the folks running a corporation perhaps maybe aren't as naive or gullible or suspect to abuse. I suppose that's maybe a big question. It's in its own right, but I think that the fundamental concern here, which is certainly prominent within the Old Testament, to the laws as well as I'm read into them, but there's a common issue of being not to take all the grain out of the field, to leave some behind for the orphan and the widow, and to be mindful of the have-nots and not to squeeze every penny out of somebody. I think there's certainly a continuation of that in church teaching, in which usury is part of that. It's like, look, we don't want to be fostering a financial arrangement or society in which people are only being allowed to be abused, financially abused, one might actually, describe it, where they're able to participate and buy things that really are allowing them to get in over their head. And we're doing it and saying it's all okay because, I'm happy to make the sale as a business owner. It's on the credit card and the credit card company now, they have to deal with it. That's their problem. Like, we do need to step back and say, hey, like, making money at any means and at all means is not okay. Like, we do have limits as to when, even if someone else was okay, like what tends to be the barometer of acceptance is like, look, if it's a fair market value transaction, buyer and seller are both okay with this and we both sign off and consent. Like, well, there's nothing there's nothing problematic. But I think as Christians, as Catholics, we can't, it's not just enough that two parties have consented to this. We have to look at what's the underlying goal that we're hoping to accomplish this. And this is building this other brother or sister in Christ up. Is this only leading to a good end for them? And, we're as concerned about that in our day-to-day financial transactions, but as much as we are as investors. And so it's making money at any means necessary. I think it'd be difficult to make that case and stay consistent within the teachings of Catholicism. So this has been just great, Jerod. I love this. It's not every day we get a chance to delve into the matter. I suppose as we start to wrap the conversation up, do you have some concluding comments either on usury or other financial matters that you come across that are related to this theme?
I think what I would just say is that, especially being Catholic just the last few years, I would just encourage anybody to realize how deep of a well the church is for all of these different topics. Like, there is so much wealth of knowledge. And to give you a little background on myself, I kind of came from a little bit more of a libertarian free market type of views kind of prior in my life. And I've kind of had churches kind of adjusted me on a few of those. So like, this is obviously one that I would not have had any issues with in a prior life. But there's just so much, I would say, in our media, there's a lot of reactionary things. And even, my first couple of years in the church, I was guilty of kind of going, I would call it now extreme on a few things while going an inch deep in them. And so there's just so much wealth, like for things specifically in this, Vix Pervinet. One resource I always like pointing people to is Zippy Catholic has one of the best kind of summaries of usury that I've seen that's really well sourced, to where if you're just trying to look through, hey, point me to all of the right documents on usury in a row. That's a really effective one. And then Aquinas also is a really good source. So if you just, look it up, it's in the Summa. So those would be the three sources I would go to first. But yeah, it's a fun one to talk about, and one that I think has been important. And specifically, I think part of the reason I cared about it is because it seemed like nobody else did. It seemed like I talked to 100 people, nobody knew. So I was like, right, I guess it's my job.
Well, I'm glad you brought it up, Jerod. Admittedly, it's not something I've committed a lot of time to, and I consider myself a decently educated human person. And so, I mean, if it's completely off my radar, I mean, I think it certainly deserves a conversation. And I suppose all we could say is we're always learning, always trying to go deeper, and it's good to learn something new every day, which I definitely have. Well, Jerod, if someone wanted to connect with you and have a deeper conversation, perhaps they'd like to kind of consider your financial advisory services. What's the best means for them to connect and follow up with you?
Yeah, so the best way to reach me would just be at either on my website, drop us a note as far as requesting some contact information, or at my email, which would be for our company, it would be info@wealthcoordinationpartners.com. So that's info, I-N-F-O, Wealth Coordination Partners in plural, .com. That would be the best way to send a request for us to get in touch.
Awesome. Yeah. So find him at Wealth Coordination Partners. Jerod's out of the Dallas, Fort Worth, broader metro area. Of course, like a lot of the advisors on the network, in many circumstances, we're able to work with folks out of the state or out. We aren't necessarily geographically bound, although there are variations on that. So certainly connect with the advisor and see about what's allowable. Okay, well, Jerod, thanks for having you on. Thanks for being on the show and delving into this topic matter. And thanks everyone else for listening. Thanks for being part of the Catholic Financial Planners Network. Super excited to have you. We're great to have this podcast. Hopefully it's producing good in the world. So between now and our next show, God's blessings to you.